Good afternoon, everyone. My name is Denise Burmeister. I'm a Director of Strategic Partner with Student Choice. We are a partner with your credit union, Dupaco, in their student lending program. And I'm thrilled to be here with you today to share a little bit about refinance and consolidation, some considerations you might want to have as you look at repaying the debt you might have accumulated while pursuing a degree in higher education. Please note today's session will be recorded, so you'll have access to this recording later. Also, because of that, we are keeping the lines muted throughout the presentation. However, once we've completed that, we'll open up the lines for any questions you may have, or feel free to submit your questions online as we go through the information today. Again, thank you for joining, and I hope you find the next few minutes helpful as you navigate the considerations for refinancing or consolidating student loans. A quick overview of what we're going to cover today together. We're going to look at some of the federal student loan updates. There's a lot happening related to federal student loans, and so I want to keep you apprised of the most up-to-date information there. How to understand your loans, some considerations about the types of loans that you have, understanding the terms and conditions of those, so that you can make good decisions about what might work best for you long-term in addressing your student loan indebtedness. And then some ways to help you save money and pay off those loans even faster. So we'll get right into the meat of things with the federal student loan updates. So it's been a very unusual period for federal student loans. When the pandemic started back in March of 2020, the CARES Act was passed, and this provided for no payments, no interest being charged on federal direct loans. That was initially going to expire within a few months. It was eventually extended all the way until May 1st of 2022, and we just learned a few days ago that will now expire August 31st. So if you do have federal direct loans, right now you're enjoying 0% interest rate, no payments are being required. So that's a great way to maximize the opportunity to pay down towards your principal if you're able to make payments on those. This CARES Act provision did not cover all federal student loans. There were some of those older programs, the Federal Family Education Loan Program or the HEAL Loan Program. Those weren't necessarily covered, but many of the servicers that were providing servicing on those loans had some other programs to assist. So please do realize, as of today, on August 31st, you will go back into full repayment on any federal student loans that were previously not required to have payments made because of the CARES Act. So please know that that deadline is coming up, and you want to really come up with a plan as to how you want to address re-entering repayment. You'll see here at the bottom of the page, there is a link if you wanted to see more information. There is some speculation that the CARES Act might be extended even beyond August 31st, so you can keep this bookmarked and continue to check it so that you know exactly what's going to happen as we get a little closer to August 31st. Some other things that have come out of the look at federal student loans and the CARES Act provisions was an adjustment to the Public Service Loan Forgiveness Program. The Public Service Loan Forgiveness Program has been around for many years and did have a requirement of making 120 qualifying monthly payments in a specific repayment plan and working for a specific, public service type employer. It was very challenging for many students to meet all of these criteria, and as a result, less than 1% of the public student or public service loan forgiveness that could have been made was actually realized. So the current administration did put forward some guidelines that until October 31st of this year, borrowers may be able to receive credit for some of the past payments they made that otherwise would not have qualified for public service loan forgiveness. So which requirements are being waived. You can see here that it's no longer a requirement until October 31st that you repaid those under specific repayment plans. And they have waived some past payments that count not being included in the 120. Many of those past ineligible loan payments may now count towards that 120 payment. So if you weren't in an income-driven repayment plan, or possibly you had 120 payments and not all of them were counted because you weren't in the right repayment program for a while, that has really been covered by this. So make sure if you do believe you're a public service loan forgiveness candidate that you check that out. And you can see again, I've listed here a web address for you that you can go out to get more information. If you are eligible for public service loan forgiveness, you probably know that because you're having to work with your employer. Your employer does have to certify that you are in a qualifying position for public service loan forgiveness, but did want to make everybody aware of that provision that is available until October 31st of this year, because that's good news for lots of borrowers. All right. So when you look at, should I refinance, should I consolidate, one of the things you want to take into serious consideration are your federal loan benefits. If you have these federal loans and think you might want to utilize some of these benefits, then you do not want to transfer or refinance into a private loan. One of those we just talked about, public service loan forgiveness. Again, you have to be working in a qualified public service job and then make the necessary payments within the correct repayment plans. If you're a teacher, people who are full-time teaching in designated schools or educational service agencies that serve low-income families, you can qualify up to $17,500 in forgiveness after you've made 5 years of payments. So if you are a teacher and you meet these qualifications, you're not going to want to move into a private loan. You're going to keep that federal loan so that you can realize that teacher loan forgiveness. The federal loans also have some really fantastic income-based or pay-as-you-earn repayment plans. This really looks at, are you having a financial hardship, and you may qualify to have monthly payments capped at 15% of your discretionary income, and then anything that hasn't been paid back after 25 years would get waived. So you would not have to repay any remaining balance after that 25-year repayment term. You also could consider pay as you earn. This is for those with high federal debt relative to their income. And in this case, the monthly payments are capped at 10% of your discretionary income, and any remaining balance is forgiven after 20 years. So do think about, are these forgiveness plans or repayment plans that I think I might want or need to take advantage of? And if so, then you're going to want to stick strictly to a federal consolidation loan. Or you might look at a combination of doing a federal consolidation loan and then separately refinancing any private student loans that you might have. So you could do a little bit of both. Stick with federal loans and do a consolidation, and then look at private student loans as a way to refinance. So it's not an all or nothing. You can really do what works best for your individual situation. All right, so in addition to all the upheaval with the CARES Act related to the pandemic, the federal government has some significant changes going on within who is going to work as a federal loan servicer for those direct student loans or for older student loans that you may have out there. So the loan servicer is the company that processes those monthly payments. If you sign up for automatic payments, you do it with that organization. You can see the servicers listed here on the left have announced that they're going to stop servicing federal student loans, and then new loan servicers have been selected. So you can see here, if you were with Granite State or Cornerstone, FIA, Navient, you're going to be getting potentially a new loan servicer, and it could be Mohila, a different division of Navient, Ed Financial, or NowNet. So please be really aware of any mail that you may receive. Oftentimes, these notices come to you in physical mail or email, and it's not anything that grabs your attention. You very well could think, oh, it's just, unsolicited mail that I don't even need to look at. So please, if you are currently with Navient, Granite State, Cornerstone, or FIA, be aware that you have a federal loan servicer change coming potentially. You could have already received notice about this, but do be aware if you've not seen that, you want to be on the lookout for it. And if you don't see anything, then be proactive and call that current servicer to find out who your new servicer is going to be. Unfortunately, when there is a federal loan servicer change, you're still responsible for making those payments, even if you somehow miss the communication, and you don't want to find yourself being flagged as late on your payment because you didn't realize that the federal loan servicer had changed. Not as big of an issue right now if you have a direct loan, because those are not having payments required until August 31st, but do be aware of this change because it is significant. This amounts to, these servicer changes, about 16 million borrowers getting a new federal loan servicer. So it is a large segment of people who are going to see this change happening. All right, so how do you prepare? Again, know which is servicing your student loan, and understand that if you do have different types of loans, federal and private, it's only the federal loans that are having this servicer change. So your private student loan should continue with the same repayment servicer, so that there isn't an impact there. Once you do find out who your new servicer is going to be, I highly recommend you update that automatic payment information. Automatic payments are fantastic. They help you stay on track, make sure your payments are on time, but you want to get that changed over. As soon as you know their next payment is due at the new servicer, get that auto pay information set up right away so that you don't miss any payments with your new loan servicer. And then make sure you update any information that could potentially affect any income-driven repayment plan you're on, or if that new servicer needs documentation from you in order to keep you in the repayment plan that you're currently set up in. Just make sure you get all of those I's dotted and T's crossed as you work with your new servicer. All right, so let's take a little deeper dive now into understanding your student loans, because this is really the pivotal point of helping you make decisions about how you might want to proceed. So the first thing is just to really take stock of what you have. Do you have federal loans or private loans? This can sometimes be very confusing. Many students, they go to college, they get an award letter, it says you've been awarded a loan, and in your mind, you don't differentiate whether this was a federal loan or private loan. It was just a student loan that I took out to go to college. So there are ways to help you distinguish the type of loan that you have. And the first one is to visit the federal student aid site. And you can see here, I've given you the address to do that. You can log in, you can use that FSA ID. This will show you what you have in federal student loans. You also have access to the National Student Loan Data System. You can go there and see exactly what you have in federal student loans. This is really helpful to know exactly what you have. With federal student loans, you oftentimes will have a separate loan for your freshman year, your sophomore year, your junior year, your senior year, maybe you had a super senior year. So you have multiple student loans, most of them all being serviced together, but you want to make sure you know everything that you have. You could also have some Perkins loans or loans that your institution may have granted to you. So this really helps you keep track of everything, including what your current balance is, what's your repayment term, how many more years do you have to pay towards this, what your interest rate might be, and whether or not the government is still paying or subsidizing some of that interest for you. So if that's the case, take advantage. If you're still getting that subsidy from the federal government, that's something you don't want to give up. If they're paying that interest for you, that's a wonderful benefit. And this also will help you see your monthly payment amount and your servicer information. Benefits, make sure that you think about these when you consider whether to consolidate or refinance. Most of the federal student loans have a loan cancellation for death and disability. You potentially could get loan forgiveness if you're doing teaching or public service. And then you have all of those income-based repayment options that can be helpful. Lastly, if you do find that you've gotten into a little difficulty, you've not been able to make your payments, or you lost track of a loan, you somehow forgot about it, you haven't made payments towards it, and it is in a delinquent or defaulted status, federal student loans will allow you to rehabilitate those so that it then becomes, like a loan that's in good standing and you're able to start repaying it again successfully. So there are a really robust series of benefits and resources for federal student loans, and you want to make sure you're aware of all of those as you think about, what your next steps might be. All right, private student loans. These are also ones that you want to make sure you know about. Where are they? Who's holding these loans? This is a little trickier to do. Most people, if they didn't keep record of what their private student loans were, you have some options as to find out where you may have gotten those. So the first one being your financial aid office. They're oftentimes very helpful. They can say, hey, yes, when you were in school, we certified a private loan for you with Dupaco Credit Union. So they're oftentimes a really great source. You also can look on your free credit report. You can see here annualcreditreport.com. That is the service where you can go and get a copy of your credit report to see what might have been reported as a private student loan for you. And this does have Experian, Equifax, and TransUnion information. And then again, you're going to want to take note of the same types of information that you do on your federal loans. What is your balance? How many years do you have to pay it off? What's your interest rate? Is there any sort of subsidy? Most likely not. And then what is the contact information for that repayment servicer? Just like federal loans have benefits, private student loans also have benefits. They're really going to vary by the lender. One of the biggest ones is co-borrower release. So most private loans are a partnership between a student and then a credit-worthy co-borrower. And after a certain number of on-time payments towards that student loan, the co-signer can apply to be released from responsibility for the remainder of the term. So that's one of the most significant benefits for private student loans that you want to make sure you take into consideration as you look at refinance or consolidation. You also want to keep in mind any graduated or specialty repayment programs that your private lenders might offer. Many private lenders will offer a reduced payment amount for the first couple of years that you're in repayment on that private student loan, and then it gradually increases until you get the loan fully paid off. So that's a nice perk for people who don't want to extend their repayment term. They don't want to go out more years, but they want a smaller monthly payment the first couple of years when they're just getting started on their job. Maybe their salary isn't as high as it's going to be, and then that allows them to make a smaller monthly payment and then repay slightly larger amounts for the remainder of the term, but they're not going past that original repayment period, which is going to save you money in the long term. So things you want to know about both your federal student loans and any private student loans. Also, just to quick remind you here that annualcreditreport.com is the one that provides the free credit report. I know there are other entities out there with free in their name, but it's not necessarily true. Annual Credit Report is the site where you can absolutely get your free credit report. All right, so I've talked about consolidation and I've talked about refinance, and oftentimes you hear those words really used, one in place of the other, but they are actually two different things. So the federal loans are part of the consolidation program, and this means that you're going to take your existing federal loans and consolidate them into one new loan. And you'll see here some of the features of the federal consolidation. Number one on the left here is there are no origination, processing, or disbursement fees, which is fabulous. You can have up to 30 years on a consolidation. The interest rate you're going to pay is going to be based on the average of the loans consolidated. So if you've got 5 loans and they all have different interest rates, they're going to use a weighted average. So a higher balance, that interest rate is going to count more than a smaller loan with a smaller balance. So they do weight it and then they round it up to the next 1/8 of a percentage point. So it is a very strict formula, so you'll know exactly what to expect. They just take all of those interest rates, use the weighted average, and then round it up to the next 1/8 of a percent. This is only for federal student loans. So through the federal consolidation program, you could not bring in private student loans that you may be holding. It is limited to just your federal student loans. In this case, there's no cosigner required because there's not credit or income verified. They're simply allowing you owe us these federal loans. You can consolidate them together. We're not doing underwriting or confirming your credit quality. We are really just helping you get all of these loans put together. They do also offer a 1/4% rate discount if you have your payments automatically deducted. So again, I really encourage you, if you're going to be in repayment, to make sure you're taking advantage of that discount, because that 1/4% can save you thousands of dollars over the long term. So that's a snapshot of what the federal consolidation program looks like. Now let's take a look at private student loan refinance. Private student loan refinance is a little different. You can take not only those federal student loans, but you can add in private student loans that you may have borrowed from a private lender, such as a Dupaco or a Discover or a Sallie Mae, or even institutional loans. Maybe your university had an emergency loan and you needed, a new laptop, so you ended up borrowing directly from your university. All of that, as long as it's coded on your credit report as educational debt, can be included in a private loan refinance. Just like the federal consolidation, there's usually no origination, processing, disbursement fees. With private loan refinance, you get to choose the term that works best for your personal situation. So you might want to get it over with fast and go with a 5-year term, or you might want a little longer to pay it off, 10 or 15 years. You actually get to choose whether you want to go with a fixed rate or a variable rate. A fixed rate gives you that security. You know what your monthly payment is going to be. But if you go with the variable rate, you very well could get a very low attractive rate right now. So it really just depends on your comfort level, whether you want to have that fixed known dollar amount for your monthly payment, or if you want to take a little more risk and going with a variable rate, you get the benefit up front of a lower rate, but potentially that could go up if rates do increase. Again, you can put in all types of educational debt. A cosigner might be needed for a private student loan refinance. This is because it is truly an underwritten loan. So they're looking at the credit quality of that student. If you're a traditional student that went through high school, you went right away to college, you're graduating college, and you're now thinking about refinancing, probably you're not going to be able to meet underwriting criteria, meaning you haven't been employed for at least 2 years. You might not have the minimum income needed. You might not have a credit score yet because you didn't really utilize credit while you were in college. In that case, you can still do a private loan refinance. You could just have a credit-worthy co-borrower. Oftentimes, it's the same co-borrower you use to take out the original loans. They just serve as the co-borrower for your new refinance loan. And again, take advantage of any discounts or benefits that a private loan refinance might provide, such as an ACH discount, because that, again, will save you lots of money, and it makes the repayment process easier. You just set it up and you're well on your way to getting fully repaid. All right, so let's look specifically at your Dupaco solution, because they've got a really phenomenal opportunity here for you to take a look at what they're able to do. So their refinance is just as I shared earlier: no origination, processing, disbursement fees. You get to choose the term and rate option that works best for you. You can refinance as little as $5,000 up to $125,000. They do offer the 0.25% ACH discount, and they offer a co-borrower release. So if you're a student and you're refinancing with a credit-worthy co-borrower, once you've made 48 consecutive on-time payments, that co-borrower can then apply to be released, and it becomes solely the student's responsibility to repay that. The nice thing is, where we say private and federal student loans, this could be the student's federal loans. This also, though, would include PLUS loans that a parent may have taken out to send their child to college. So that student could actually bring in their parent's loan into the refinance as another flexible option when you're considering how to move forward as you repay your higher education debt. So a lot of flexibility with Dupaco's solution. All right, so how would you qualify? You can see here the underwriting is very straightforward. A co-borrower is not required. So if you have been on your job for at least 2 years, you've got $36,000 in gross annual income, you have your minimum FICO of 660, no student loans in default or no bankruptcies in the last 5 years, you could apply and be approved on your own. Dupaco does have a requirement that you be a college graduate. This is absolutely important. It's the #1 predictor for repayment success because you have that degree to leverage. So keep that in mind. And then your debt to income may not exceed 43%. So that means, when we look at all of your indebtedness and, how much you're making, that shouldn't exceed 43%. So very straightforward underwriting for their refinance loan. All right, so you think, well, this is interesting, but what would I be paying each month if I do refinance with Dupaco? What does that look like? So they have on their Dupaco site a wonderful loan calculator where you can actually do the math. So in this scenario, we have a borrower who has a $61,000 balance. Their rates are anywhere from 9 to 9.5. They're in a 180-month repayment, so 15 years, and they're currently paying just under $631 a month. So if they were to refinance, they could look at, based on their credit quality, a rate of 6.99. If they opted to go with the 10-year repayment, their monthly payment is going to go up from $630 to $707. So a difference of just under $77. But look at what they save. They're saving $28,000 plus by shaving off that extra time period. So if you're able to swing $77 more a month, you can save yourself over $28,000. That's the benefit of paying off sooner and getting that reduced interest rate. Maybe that person is in a different scenario. Maybe their current payment of $631 is too high and they're really looking to get some lower monthly payment. then they might look at doing the 180 months or the 15-year repayment, giving them a new payment of $547 and change, so meaning that they're saving $83 a month. Even so, because they've reduced their interest rate while they're still paying over 180 months, that lower interest rate still helps them save $9,000, and they're reducing their payment by $83. So from the Dupaco site, you can see here the address. You just simply go in, put in all of your outstanding loans, what your interest rates are, and then you can calculate your savings to see what might work best for you. This tool is extremely helpful in decision making about what might be the best scenario in your particular situation. I have another example here because I think these are really, they really illustrate what a few changes in what you're doing can make significant difference in how much you owe. So this is a student. They had 3 federal direct unsubsidized loans, meaning that the government was not paying interest on those, and they owed $27,640. And then they have 2 Parent Plus loans. So their parent had taken out a little over $67,000 to help them pay for school. Their interest rates varied anywhere from 6.8 to 7.9%. They had a 10-year term. They had been paying for 2 years, and they still have 8 years to go. And this borrower, they had 2 main objectives. They wanted to lower their interest rate, shorten the term if they could, and they wanted to take responsibility of those federal Parent Plus loans. So based on this scenario, right now they're in a 10-year repayment. They've got 8 years remaining. They're paying $1,311 a month. And total interest charges, if they stuck with the standard 10 years, they would have paid $30,998. However, they decided to refinance. They're going to 5 years, so they're shaving off of this 8 years remaining. They're shaving off another 3 years. You can see their payment is going up for sure, up to $1,723, but they can afford to do that. They're also taking advantage of a very low variable rate because they're going to pay it off in the next 5 years. So they're willing to take a little more risk on the variable rate. That being said, making that higher monthly payment, they're still saving themselves $8,552 in interest. So it's a huge amount of money that can be saved by either paying off faster, reducing your interest rate. All of those things make a big difference. All right, here's another situation. This is very common as well. Excuse me. We have a student who has 6 federal direct subsidized loans. That means the government was paying the interest on that loan for the student while they were in school and through their grace period and potentially into graduate school. They also have unsubsidized loans for a total of $23,460. Their interest rates right now are fixed. They range from 3.6 to 5.23. They're in a 10-year repayment term and they have 9 years left to go. They also have 3 private student loans. You can see a little over $32,000. Those are variable and they're 3.25 to 4.6%. That they have at a 15-year term and they've got 14 more years to go. However, here's the big caveat. This borrower is planning to enroll in graduate school next year. So they are not going to refinance because both federal and private loans may be deferred in grad school. So they're not going to have to make payments on these while they are in grad school. Most refinances, if you refinance and you go back to school, you're still going to be required to make your monthly payment, even if you're full-time enrolled. So make sure you realize that because that is a big decision changer if you know you're going to be going back to school and want to have that in-school deferment. That subsidized loan may not accrue interest while in deferment. And you can see they've really got some very good rates here. When these loans were originated, they got some super low rates. So it really isn't advantageous at this time to look at consolidating or refinancing. their best option is to, continue on to graduate school and then make a decision once they're finished there. So some things, just are fine to leave as they are, depending on your situation. All right, so tips to consider for paying off early. Can't encourage you enough. Pay more than your minimum payment. That's always going to be helpful because it will go to drive down the principal balance. If you're making payments, make sure you're checking to see that any extra payments that you're submitting are going to the principal balance. Most of the repayment servicers, there's a little flag that you have to check or something that to indicate, don't just advance my payment for next month. I want this extra money to go towards my principal balance. So make that payment more than your minimum and make sure it's going towards your principal balance. Make sure you know what your payoff dates are. That's a real goal to have in mind. If you get any cash windfalls, a really great tax return, you can certainly put that towards the principal balance. Look at if there's a job you're considering, one gives you the potential for public service loan forgiveness, one doesn't. That might weigh into your decision as to which job you're going to take. You get those annual pay increases rather than, immediately spending those, put that towards your student loan payment. And then if you can at all possible, in any way possible, avoid those specialty repayment programs, the income driven, excuse me, as an example. They are very helpful if you need that type of support, but it's going to dramatically increase how much you pay in interest over the life of the loan. And having to look at paying for 20, 25 years is not, an attractive, thought. You want to get it over as soon as you possibly can. Trim your budget. Any money that you can save and put that towards your student loans will be absolutely, to your advantage. Take advantage of those interest rate reductions. Those are significant. So make sure you sign up for those. Easy peasy to get those taken off, that 1/4% just by having automatic payments. And then take advantage of your tax deductions and credits. You'll get annual statements from your loan servicers showing how much you paid in interest on your student loans. So make sure you get that deduction when you file your taxes each year. And then know which student loans are not good debt to keep. So you want to make sure that you keep your lower interest rate loans, those that have shorter repayment periods. Those are all to your advantage. And do realize you have flexibility. So you could do a federal consolidation loan for just your federal loans, and you could do a separate refinance if you wanted to do just your private student loans, or you can combine them all together with a private refinance. But you can pick and choose based on, the interest rate or the repayment terms. If you have potential for having some of that forgiven, then you're going to want to leave it where it is. And then lastly, pay more frequently than your monthly billing statement. If you can pay every 2 weeks or every week, that helps you, pay down the balances even faster. So all good things to consider doing as you look at repaying. Dupaco has a wealth of resources and information. I know I've inundated you with a lot of content already, so you might want to come back and look at some of the student debt refinance information that Dupaco is providing, because it's very robust, helpful information. They have that great calculator that I showed you where you can figure out exactly what you might save by doing a refinance. So that web address is listed here for you. Take advantage of this. It's really awesome content. And then lastly, I wanted to just make you aware that we also have a full-time college and repayment counselor. So this person can meet with you one-on-one. You can schedule a 30-minute meeting with our college access and repayment counselors at this web address and talk specifically about your individual situation. Ask those questions that you you aren't really sure, well, should I refinance this? Should I consolidate this? It's a lot of decision making. And so we are certainly here to help with that as well. So please make note of this address and you can schedule that 30-minute one-on-one phone meeting with the college and repayment counselor. Thank you so much for your time and attention today. It was my pleasure to be here with you, and I hope you found this helpful as you look at repaying that higher education debt. I think we are now going to move to questions.